What's up, y'all? It's Drew Trades, and I'm about to explain the buy model, the liquidity model that we caught on NYM, the buy setup. I'm gonna explain about the gaps, how to draw 'em. I'm gonna explain how to draw the levels. I'm gonna explain every little confluence and every little behavior so you can bunch them together and create a bias. So before I even get started, I'm gonna just simply say this, that we do the same thing every day, and this is how I personally look at the market. And I do the same thing every day. I don't do anything different. So what we do is, one, before I even get into the charts, we go on the 1 hour and 4 hour, the higher time frame, the higher time frame. We look for a bias. I don't marry a bias, but if the bias is there and it's like, okay, it's bullish, then we're bullish. For example, let's say we're bullish. Okay, we're bullish. We simply drop down to the lower time frame, the 5 minute or a 15 minute, 5 minute preferably for the entries, and find anything that's matching the 1 hour with a bullish behavior, meaning like bullish PD arrays, meaning like uh bullish bearish FVGs, inverse and bearish FVGs, or anything that lets you know that is bullish to then take an entry, because everything starts on a smaller time frame to then form on a higher time frame. It's simple as that, right? So let's get into it. I'm gonna go to the before I even get into this, I'm gonna go into the higher time frame and show you what all this means. So we're gonna go to where is it? Okay, we're gonna go to this higher time frame, and I'm gonna show you about targets and liquidity and all that good stuff. So I'm gonna delete all this, and I'm gonna show you what I've seen on the 1 hour. So on the 1 hour, this is the 1 hour. This right here is price from yesterday, Wednesday. It sold off, it sold off, it sold off, it sold off, right? But once it sold off, it stopped right here at this major level, and what it created a support. What did I say about support? When you see a support level, you know that price wants to buy up. So cool. Price came down here at the support level, right? And it rejected it. So if it rejected it, where do you think it wants to go? It wants to go up. If it wanted to stay bearish, it would have stayed playing below this level. It would have stayed doing something like this: lower low, lower high, lower low, lower high, low. Stay right here, and then be bearish to continue down. So overall, we are still bullish. Why? Because I pulled out this fib and noticed that we were in the range yesterday or previous weeks and stuff. We finally broke out that range, right? But then if we wanted to like um invalidate this whole bullish structure, it has to go under this 1% level of this fib or play around here, have any bearish behavior. I don't see anything bearish. So London came in, we bought all the way up and left a what? We left a fair value. We left a bullish fair value right there. So this is a bullish FVG, right? And this is how I see the market. So we left that bullish FVG, letting me know, okay, we rejected this major level, this 1 hour major level, which is right here. Notice how I'm using we're on a higher time frame first. I'm using this to give me my bias to see what I'm gonna do for the day. So this is me doing top down analysis. You always got to use your levels and use your gaps and all and put them together in a confluence to let you know what price wants to do. Like I said, we don't predict, we react, and we just ride the momentum and ride the wave. So this is a bullish fair value gap. And how you draw gaps is like this, right? You always got to start where there is a impulsive candle. You see that impulsive candle? They always leave an imbalance in the market. Meaning, you look at the first impulsive candle. Okay, cool. We see that's a big ass candle. Cool. Let's look at the wick to the left. This right here are called wick. We look at the wick to the left, and then you look at the wick to the right of the bullish candle. You look at the two candles in between that candle. So that wick is this wick touching that wick at the bottom? This bearish candle. It could be a different candle. It could be bearish or bullish. It could be any color. If that wick is not touching that wick, that is an imbalance in the market, meaning that that was just straight buying momentum, right? Straight buying momentum, right? That's an imbalance. Price has to come and feel that. And if it don't feel it to respect it, then it let us know that price wants to stay bullish. So we're gonna jot that down. How we draw it is we take out our box tool, we go from this wick to that wick, and then we drag it across into the future. So we know that that is a bullish gap. That's cool. That's letting us know that we are creating bullish sentiment. So now we're creating bullish sentiment on to the other side. We see that we kind of blast through the 0.6786 level. In my eyes, we're rejecting this level because we didn't close under here. So we rejected the 0.786, could then go past the 0.618, could then create this gap. And now since we create this gap, we are above the zero point 0.5 level. We are above a major level, a major 1 hour level, right? So now, before all this happened, price was in this area, right? Price was in this area dancing around. Even though price did break the support zone, the support level right here, it broke that and it broke all this consolidation. It broke this range. Price was in a tricky area because it could have done one or the other. It could have came up here, played around, and then drop. But I'm not gonna take a drop unless I see bearish behavior around these levels. Nothing was telling me that it was ready to sell you. Nothing was telling me. It was a fight, but nothing was telling me that it was ready to sell you. So I need to find some type of behavior in here. So since we're bullish, I'm gonna find bullish behavior. I see bullish behavior, I will take buys above 0.382, above this 1 hour major level. It only makes sense, bro. It's common sense. If we acting bullish, we're gonna just take the buys. Because if you was trying to predict the market, like, oh, we broke, it's gonna sell off, you would have been crying, blew your account, and been stopped out, bro. You would have been looking stupid and looking sorry because you didn't wait for confirmation. You didn't wait for a price to tell you that it wants to sell or it wants to buy. So me being in this area, we dropped down to the 5 minute. Like I said, we only take trades around these major levels. You can see that we are around a major level. And notice that we're still on the 1 hour. We are around 1 hour major level and another 1 hour major level. So we can anticipate price to break out of this zone if it stays bullish. Why? Because now we have another higher low. We have another higher low sitting right there. If the price respected this 1 hour gap, created more bullish sentiment, we know that this is a higher low, the new higher low. Higher low equals what, bro? Higher low equals what? A higher high. So where do price wants to go? Where do you think price want to go? Now, I'm about to answer that question. Look at this 15-minute um gap, this bearish gap. This 15-minute bearish gap, price kept rejecting off this midline, rejecting. All this is right here, bro, is just liquidity. Liquidity, highs, liquidity, liquidity. Even though this liquidity got taken, we still got liquidity up there, and we have liquidity sitting right here. The more times price hits a level or is inside this gap, it's a high chance that price want to come in and clear all this liquidity. And what it did that. So that was my target. I wasn't too much pressed about price coming through this midline because I knew price want to hit these levels of liquidity, and these were my actual target. The top side of this gap also could be a target, but it's better to just aim for what you want, 1 or 2, 1 or 3, and call it. You don't have to aim for 1 to 5, 1 to 7, whatever. It's all about compounding, bro. So we took those liquidity levels. Those were my targets. And I'm gonna explain that again. It's liquidity because all these highs are just sellers wanting to bring the market down. They want to bring the market down. They failed. They failed to use these areas of defense to support this support level. Failed to go ahead and do this. Drop, come back, make a lower high. Boom. There's no lower high in the market. What did it give us? A higher low. Where's the liquidity? Sitting right here. These highs need to get taken out. And that's like a trend line liquidity. Trend line liquidity are good draws of liquidity as well. So this is a nice draw of liquidity. And price most likely will come and take out these highs up here. So now we know the overall bias of on the 1 hour. We drop down to the 5 minute. And this is where we go to the 5 minute and find the bullish behavior. We drop down to 5 minute right here. Remember, this didn't happen yet. So we go to the 5 minute right here. But now we're on the 5 minute, and all these are notes. I'm gonna let you know what was going on right now. I'm gonna delete all this. I'm gonna delete that. 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 And I'll keep that. And I'll put that over here. So what did we do and what do we see to guide this trade? So we know that, going back to the 1 hour, right? We know that this was the 1 hour bullish FVG. We waited for price to come in and 630 candle. Don't trade the 630 candle. I wait. Personally, I wait for the 635, the opening range high and low. Because I like the opening range high and low because it tells me what price wants to do and who's really in control of what price want to go for that day. So how does opening range work? They work as a confirmation type confluence. So boom, 635, 630.25, price came down, swept these lows. Everybody and their mama thinking like, okay, price ball all the way up, it's gonna sell back down. When you see a formation like this, bro, just a shoot in the air with a 1 hour gap getting left behind, most of the time price don't come back, bro. It literally just continues on up. Like it's just common sense. If price did all this buying, you think it's gonna just drop back down? No. I used to think that. I used to be like, okay, I'm gonna take sales, it's gonna drop. No, you're gonna drop, you're gonna become liquidity for price to then go the whole opposite way. So we can't just base our entries off of that. We need confirmation and confluence, right? So boom, price came in 625, 630. Ooh, we swept these lows. That was liquidity that got swept. Boom, price swept that, created another bullish candle, 630, 630 candle swept it. Now it's buying up, buying up, buying up. Let's wait for the 635 candle. Cool. 630, 630 candle close. That's the opening range high, and that's the opening range low. We're looking nice. We're looking nice. We're looking nice for a buy. So now, am I gonna just buy since off this breakout? No. I like more confirmation. I like confirmation of a IFVG or a respected bullish gap. You feel me? So now I don't think this VWAP was right here. I think it was lower, but I did count it as a confluence because now we are still above this VWAP, letting us know that it's bullish momentum in the market. Like I said, you don't really need too much lines, it's too much gap because you don't want to mess up your judgment and confuse yourself. We know that this is a 1 hour bullish gap. We know that it's respecting it, and now we're counting bullish behavior. Sell side liquidity got taken, and now we're going the opposite way. That's one bullish behavior. We broke out this opening range high and closed above it. That's the second bullish behavior. Now this is counted as a higher low on the 1 hour. That's the third bullish behavior. So we have everything that's saying is bullish. It doesn't want to sell. It doesn't want to come down here and sell off, right? So with that being said, we also have a 5 minute bearish gap right here, right? So we're gonna try to inverse that. And notice how many times we respected that min line. Just like the 15 minute. It's liquidity, bro. It is liquidity. Look how many times we respected the min line. 1, 2, 3, 4, 5, 6, 7. All that is liquidity, bro. Those are sellers wanting to sell the market. That is just liquidity, bro. That is a draw of liquidity. You can put that there too as well. Right there, that is a draw of liquidity. Right there. Price is gonna grab it and then probably just shoot back up. It has no business coming back down. So we see that, like I said, the more times price keep trading and keep puncturing these gaps, the higher chance to get weaker and the higher chance to get inverse with a clean, nice inverse. So the reason why price came down, sold off like that is because we still are in this 15-minute bearish gap, and price there's still a lot of sellers in this area. Sellers want to push the price down, but sellers failed. So my stop losses were protected. My entry, matter of fact, was on this inverse. And now if we could go to the 1 minute, there's a 1 minute in there. There's also a 1 minute inversion in here somewhere that I took, but I don't want to go to the 1 minute because it's gonna shrink everything. But let me see if I can go to the 1 minute. Let's see. Okay, I go to the 1 minute. Boom. We see another right there. Boom. Is that wick touching that wick? No, that is the 1 minute. So I was already in this trade. I got in on this candle. Stops were fairly at 60, 60 right there. I got it on this bearish 5 minute IFVG. Seen price coming down. I wasn't tripping. I was like, okay, my stops are protected. How many points under this open range? I give myself like about like 40 to 50 points. About to like the midline. Midline of the opening range. That's 100. Perfect. So like my stops are really right there. So right there. Right. So these are my areas of defense. I'm protecting underneath this 1 minute. Inversion, that came after I was already in the trade. I entered my protect defense levels is underneath this 5 minute inversion right there. So I have two and the opening range high. I don't want price to come back in here. Usually price does come back in here, play around to grab more buyers, and that's what it did. Came in here, played around just to grab more buyers and then it inverts. I could have scaled in, but I didn't scale in because I didn't trust this 15-minute bearish gap that price could have just respected it and dropped back down because all the selling momentum, right? So once I seen price came up here, closed up here, and started playing around, I then began to move my stop at 55, 50 or 55, right there. Now my stops are right here, right underneath this last low that it made. Now, because I see price is playing out, this now becomes a 1 to 3, a 1 to 3, 1 to 2.5. Yeah, 1 to 3. Now you see how my stops are protected underneath these gaps. I don't have too many boxes, too many lines, and they're protected underneath this opening range low. Since I seen price was already up here, broke this midline, so then the price began to come back down, I would put my stocks at break even because I would just have this as a risk-free trade. It doesn't make sense. Price will come all the way here and then just come back down. You feel me? So we're gonna keep that. Let's go back to the 5 minute and talk some more on what the 5 minutes actually doing. So you can see that that was my entry trigger, and I entered once momentum came in. So that was my buys. Stop loss is, I mean, not stop loss. TP was at the end of this full TP was at the end of this gap, but we closed around these wicks, around those wicks somewhere. Yeah. Full stop loss was 50% of this gap. But since, like I said, price came up, came down, protected, then we move our stops a little smaller, right? So now we have liquidity, grab, boom, one bullish behavior. Respecting the bullish 1 hour bullish Fibs gap, we have two IVGs on a 5 minute and 1 minute, and we have an opening range high breakout. That's four confluences, and we're closing above this 1 hour major level, so that's five confluences to take buys, and that was it. That's the whole model. And if you need help figuring out how to draw gaps and spot more liquidity, let me know because I can help you with that. Liquidity is literally just like these lows, these sellers getting stopped out, price coming to grab the money to then push price all the way back up and grab other draws of liquidity, which is right here. These sellers up here that tried to push price down. If price don't want to keep going lower, like it's like a video game, bro. So like price goes for new highs, new lows, old lows. So all this got taken out, all this got taken out. And if it don't want to be bearish no more, where do you think it wants to go? You want to grab more draws on liquidity. Right there, right there, right there, right there. And it grabbed these draws of liquidity right here to then go back up. And yeah, that's it.